Okay, hello and good morning everyone. Welcome to JFD Traders Espresso with me, Darius Anucauskas. Today is the 3rd of July 2019, so welcome everyone. Welcome to this Wednesday's morning session where we're going to have a quick look at the markets, a few of the charts, a few of those that we looked at yesterday, and some new ones as well. So as always, before we jump into those charts, let's quickly have a read through our risk disclaimer. So the content we produce does not constitute investment advice or investment recommendation, should not be considered as such, and does not in any way constitute an invitation to acquire any financial instrument or product. As always, a few seconds for you to read the rest and we can continue. Okay, so also just a quick mentioning of our JFD YouTube channel, to which you can always subscribe to in order not to miss any of our webinars that we produce on a daily basis. So yep, feel free to do that. And also our JFD research webpage, on our website here. If you go in here and click on JFD Research, you can find some good material here to kind of some good in-depth market analysis. So feel free to check us out here, and I believe you can find a lot of useful stuff. But first, let's jump into the charts. Now, yesterday I talked about gold in my traders tea time, and basically I was telling you guys to keep a close eye on this little short-term downside resistance line. Now, given the fact that the commodity, the precious metal, rebounded from its upside support line here, taken from the low of the 30th of May, it managed to travel a little bit higher. Like I said, broke this downside resistance line and pushed further up. Now, this is what I was talking about. This is what I was telling you guys to keep a close eye on, we may see this one traveling all the way here towards the 1439 zone. But as you can see, the precious metal kind of just didn't hit that, just by a few points, and then retraced back down a little bit. So it's currently it's balancing around this 1425 zone, approximately around there. And of course, if this continues, if this one holds today, then yep, we may see another push higher. The only thing is, for those who are more on the cautious side, what you could do here is just wait for a push above the 1439 zone first, and then aim for higher levels. This way this way gold would confirm a forthcoming higher high, and we could aim for slightly higher targets. Now, I do have this 1488 zone here marked on my chart, but the only thing is that we need to find a better level here, just maybe slightly before that. Of course, the psychological 1450 could be a nice target as well, but as you can see, if we push above the 1439 zone, of course, this will kind of put the commodity back in the kind of the territory of May 2013. So again, I mean, in a way, if we go back here all the way to May 2013, above 1439 zone, I mean, what we could start looking here, maybe we could see that these inside swing lows here that we're seeing in the, like I said, in the first days of May, that's just approximately around the 1445, 46, something like that, or even actually around the 1450. So as I said, good potential level could be around the 1450, and as you can see, that 1450 kind of didn't allow it to close any of the day here. This is the daily chart, by the way, now. So any of the daily candle wasn't able to close below the 1450 zone, so it acted as a good area of support. But that happened only roughly between the April 30th and May 8th. After that, you can see that the gold slid back to broke this level, broke the 1450, and slid further to the downside. So that's why, guys, for now what we're gonna do here is, like I said, we're gonna just aim for the 1450 area, approximately around there, but we will only consider that if we see a push back, a push above the 1439 zone. So keep your eyes on that one. Of course, like I said, inside here and before the 1439, in a way, this could kind of balance around here somewhere. As I said, keep an eye on this 1425. If it holds, this could be a good ground for this one to push higher. But if it starts falling back below this little short-term tentative downside line, of course, this could raise concerns about the upside. I mean, we could see this one sliding further down again, maybe testing this upside line. But in order for us, let's say, to get slightly more comfortable with lower areas, a drop below the 1379 zone, or should I say even 1380 zone, could be that nice good level in order to kind of consider further decline. So for now, be very careful. Of course, the downside is slightly off the table on this one, and let's see how this is going to play out. But for now, like I said, we are more bullish than bearish, but just for that better confirmation of the upside, of further upside, we need to see a nice good pop above the 1439 level. Jumping into WTI oil, now this took a hit. Of course, the OPEC meeting has finished now, so the agreement there was reached that they will extend their cuts for at least 9 months. So their cuts, the production cuts. So as you can see, the oil kind of took a beating on that one a little bit initially. Of course, it's kind of an opposite reaction here, but to be honest, I mean, the cuts were quite expected, and that's probably why this commodity drifted to the downside. So in a way, we could see this one as maybe as a correction, maybe before another leg of buying. But for now, from the very short-term perspective, in a way, as you can see that now the commodity is back below its 200 EMA. It's back below the 56.64-65 zone. So in a way, we could see this one drifting a little bit lower. In a way, in order to find a good potential target here. Now, for today, for example, it could in a way drift towards the S1, which is around the 55.30 zone, approximately around there. This is the area that could get tested, and I'm talking about today, of course. If this wants to continue drifting lower, if this continues to push further below the S1, and the next potential area of support could be seen near the 54.36-35 area, marked by the high of the 18th of June. So good potential area as well, but again, we'll go step by step. First, given that, like I said, given that this one dropped back below the 200 EMA and dropped below the 56.64 zone, we will aim for the S1 today, which is around the 55.30. If that fails to withhold, the 54.36 could be that next potential target. In order to shift our views back to the upside, ideally we would like to see a push back above the 200 EMA here, shown on the as the black line on the 4-hour chart. And I mean, for that better confirmation, a push above the 57.73-75 zone, something like that, approximately there, could kind of open the path towards these slightly higher levels. For those who are very careful and very cautious, what you could do here is just draw an additional downside resistance line here. Just let me quickly adjust this. Draw this downside resistance line here, taken from the high of Monday, and wait for a break not only above all these that I've mentioned, but also a break above this downside line, this short-term tentative downside line. This way, we could then aim for the highs of this week. So yep, keep your eyes on this one, guys, and let's see how this is going to play out later on. And DXY, very quickly on this one, it traveled further away after breaking, of course, the 96.45 level that I talked about. It traveled higher. It managed to reach our areas of resistance here, the 96.68 and the 96.80. It just kind of overshot the 96.80 by a few points here, and basically now it created this new high near the 96.88, which we're going to keep an eye on, because you can see that the index drifted back down here, corrected lower, and tested this 96.68 zone, which it kind of failed to break below, or should I say actually close at least a 4-hour candle below this. So in a way, we're going to keep an eye on this level here, the 96.68. If we see a nice good drop here and maybe a close of the 4-hour candle here below this, then we could consider a possible move back down towards the 96.45. But for now, of course, you can see that this is trying to make its way back up here again. Some could say maybe this could be seen as a maybe somewhat of a flag formation, but again, it's a bit of an ugly flag formation, I would say, not a clear one. So that's why, guys, what we're going to do here is we're just going to wait for a push above the 96.88 level here, then the high of this week, and then ideally maybe a push above this 200 EMA in order kind of to aim for further upside. Now, further upside could be limited due to this downside resistance line taken from the high of the 23rd of May. So initially we will target that. So we're not going to go drastically to the upside here, but like I said, keep your eye first. Before we could consider that upside, we need to see that nice good push above the 96.88 level. So keep your eyes on that one. Ethereum, I talked about this one yesterday, and I was telling you guys to keep a close eye on this downside resistance line. This is a bit of a tentative one, but nevertheless, it's just a line that's just a gauge kind of to kind of measure in to monitor the activity here. So it rebounded nicely from this upside support line. This is what I was talking about yesterday. So this upside support line taken from the low of the 6th of May kind of played out very nicely here as a support ground, and allowed the bulls to kind of regain control here and push this one to the upside. Now, what I was saying as well, that we need to see a nice good clear move above the 296 zone, or even ideally the 300, the psychological 300 level. So if for now, of course, everything's kind of working in favor of the bulls, we are getting that nice good move above the 296 zone, but be very careful here right now, because you can see that it's now kind of stalling here near this 50 EMA here, shown as the red line on the 4-hour chart. It managed to reach its R1, but kind of got rejected around there and traveled back down. Still, this is at this point in time, this is looking quite positive. We could see this one pushing further up here, but probably just for that better confirmation now. A push above the 300 level could kind of open the path back down, back up here towards the 318 zone, which previously, as you can see, acted as a good area of resistance. We're not going to drag too high yet. We're going to see how this is going to perform around this line, but again, like I said, we are more positive than negative on this one right now. In order for us to get, let's say, slightly more negative on Ethereum, well, ideally we would like to see a drop below the of course, initially a break of this upside line, of this medium-term upside line, but then just for that better confirmation, a drop below this low here, the yesterday's low near the 271 zone. A drop below that could open the path towards lower levels, as it would confirm a forthcoming lower low. So that's why, guys, for now, be very careful. I mean, yes, it did travel higher. It's good news. We can actually get rid of this downside line. We no longer need it. For now, like I said, we are more positive, but let's wait for that nice good push above the psychological 300 level. EURJPY, very quickly on this one, I talked about EURJPY yesterday in my Trader's Tea Time, and I was telling you guys to keep a close eye on this 122.12, and we were still trading above that, and basically what I was saying, that we may see a drop. If we see, or should I say, if we see a drop below this, this could in a way open the path towards the 100 excuse me, towards the 121.62 zone, which happened according to plan here. But the thing is, you can see that the pair even overshot that one and kind of dropped lower, so it found good support near this one right here, near the 121.40 zone. Nice good area of support here now, because it becomes this one. So what we're going to do here, we will monitor this 121.40 level today. If this breaks again, then well, it could in a way end up testing this upside support line taken from the low of the 3rd of June. So this tentative upside support line in a way could stall the rate initially. We could even maybe see a small rebound back to the upside here, but for now that's the kind of the situation. You can see that the pair already this morning, it tried to push higher, but kind of failed to push above the 121.62 zone, the one that I've mentioned in my yesterday's video as well. So if now we're going to do here is, if we see a drop below the 121.40, we will aim for this upside support line. We're not going to drive it too far to the downside. In a way, we're going to see how this is going to perform around here. But also just to kind of keep in mind something, that even if, let's say, if we see a drop below this upside support line, if we see a break of this upside support line, in a way the rate could slide all the way here towards the 120.75 marked by the low of the 3rd of June, but it may also quickly retrace back up here and kind of close, let's say, the day above this upside line. So we would get a nice false breakout here. So that's something for you guys to keep in mind. So yep, do not exclude such a possibility. So, but again, initially, before we aim for lower areas, we will target the 100 and we need to see a break below the 121.40 level. In terms of the upside, well, we're going to take a very conservative approach here and wait for a pushback above the 122.12, and only then we'll aim for slightly higher levels. And the USDSEK, this is something that I wanted to quickly put on your radar. Today we have the Swedish interest rate decision, Swedish central bank interest rate decision, so it's coming up shortly. So in a way we could see some volatility, increased volatility here in this pair. You can see that after finding good support in June here, after finding good support near the 9.2364 zone, near that level, the pair rebounded and pushed higher. It traveled all the way here on Monday. Traveled all the way here towards the 9.37 zone, 9.37, 37.15, if I'm not mistaken. Let me just actually adjust this level just to see exactly where it is. So it was around there, guys. So 9.37. So yep, it managed to travel all the way here, test that area, and as you can see now, it's slid back down. So it found some support here near the 9.3140 area, but it's now kind of stuck here in this little territory between these two levels. So as you probably now are following me now, you probably understand what I'm going to say. We need to see a clear break above this 9.37 zone before we could aim for higher levels. And if this falls back below the 9.3140, then well, I mean, in a way we could consider a possible move back down towards the lowest area here, the lowest point of June, near the 9.2364. So in a way, if I'm gonna put some arrows here, this is how it's going to look. We're going to aim for, if we see a push above the 9.37 zone, then yep, we'll initially aim for the 9.4150, which is near the 200 EMA on the 4-hour chart. But if that gets an overshoot, something to keep in mind for you guys here as well is this downside resistance line. So also which could in a way kind of help resist the rate acceleration if we get something like that. So that's why, guys, for now, be very careful. Again, like I said, keep your eyes on the 9.37 level on the upside, and on the downside, the 9.3140. A break below that could in a way open the path back down towards the lows of June. Okay, guys, I hope you found it useful. Thank you very much for sticking around and watching until the end. If you want to join me later on, make sure it's tea time. As always, that's 13:15 GMT time. For now, I hope you have a beautiful trading day, and I'll see you later. Bye bye.